Hey there, Prog family. How you doing? This is Jim Marin here for the Great Canadian Apes. James is still not feeling well, but thank you so much for your good wishes and support for him. Today, we're down 7.8%. We'll be giving you close looks at how market makers slash manipulators specifically bring price through levels of support. We have three examples for you. This can only be done in the short term, however, not in the long term. In the long term, they'll get themselves in trouble. The Ortex and Fintel short squeeze data will be brought to you, and PROG is still on that leaderboard. I'll look at the weekly options chain and what price is optimal for hedgies. And we'll be giving you our price target for the week. Overall, PROG is still looking very good long term, not financial advice. On the European market in Germany, PROG was down 1.89%. Previous close was at 2.12 euros. We opened at 2.12. That was the high. We had a low of 2.08 and closed at 2.08 for $2.36 US, below everybody in Europe. Thank you for your support. Today's price action: PROG down 7.8%. The previous close was 243, opened at 240, high at 241, low of 217, closed at 224, with volume at the 15.2 million level, which was about 50% higher than where it's been lately at the 10 million, but not anywhere close to the average of roughly 80 million. Both the SPY and the NASDAQ was up by 1%. Today's level of support was at 225 and dropped to 219. We had levels of resistance at 233. Past levels of resistance have been at 250, 270, 287, and $3. So watch for that. Once it goes on to the upside, likely into next week or the week after. Levels to watch on the downside support. We have that 225, and which was broken through, and then there's the level of $2. Some say this is the most manipulated stock in the market. So starting out right at about the 241 level, dropped slightly, up slightly, but then it just very quickly consolidated through the morning. But then there was just key moments of shorting, which we will take a look at. In fact, why don't we take a look at that right now? If we take a look at what happened at about 105, we've got the volume here. Now, certainly there's, most of the volume is going to happen on any stock within the first hour. If you were to spread out the volume evenly amongst all minutes of the day, you're looking for 15 million for a 6.5 hour open day to be about 30,000 shares per minute. Because there's more in the first hour and more in the last 15 minutes, then generally we'd be looking at an average of maybe about 10 to 20,000 per minute from those periods from 10:30 to about 3:45. First specific example that we're going to take a look at and how they manipulated price. Take a look at this. Here's a midday candle. What's going on along here? This has had a level of support, and I'm going to show you what's happened for the last 3 months. This goes back to June. Here we have 225 has been shown as a level of support here, here, here. Yes, it broke through, but then it once it regained that level over 225, it was here and all kinds of points along. 225 has been a major support level. You've got to do something pretty substantial to be able to break through it. Now, let's take a look what happened an hour before this. An hour before this was just consolidating. Here we have from, let's take a look all the way back here. Let's say we started to consolidate at about 11 o'clock. And from 11 o'clock, where we were at 233, we're going in between 233 and 225 for like 2 hours plus. Then all of a sudden, what happens right here? And it has nothing to do with the 50-day average. It doesn't have anything to do with 200-day moving average. There is no depth crosses happening. We weren't at a critical point of the Bollinger Band. And so let's see what happened. Here, it opened at 228 at 1:05 p.m. and they put in 10 times the amount of volume to be able to put through it. Nobody's having, like, why? Why all of a sudden do we have 313,000 shares being sold that minute? Well, you sure dropped the price by 2 cents. It was being gobbled up, gobbled up, gobbled up like polar bears with a bucket of fish in front of it. And then that wasn't enough for it. And then all of a sudden here at 114, they put in another 164,000 to be able to try and break it down. Then they put in another 50,000, another 40,000, another 40,000 to be able to try and break it down under 225. Well, they couldn't. 139. They must have thought, okay, now we're gonna attack. And so here at 139, what do? They put in 250,000. What was happening before? Let's say this green candle here, 14,000. Here, 17,000. Here, 10,000. What? All of a sudden, at this minute, 1:39 p.m., they're going to drop to 250,000 just because everybody wanted to sell that moment? No, it's to be able to break through this resistance level that's been a key resistance level for months. Then what did they come back with? They came back with, boom, here's another bomb that they put down, 115,000. They put down another bomb, 100,000. And so finally they, in these 4 minutes, from 1:39 p.m. to 1:42 p.m., they dropped 500,000 shares, which was the equivalent of what should have been dropped in an hour. Well, half an hour. But they concentrated it. Why? To be able to break through that level of support at 225. And unfortunately, we were never able to regain that for the rest of the day. Here's the 225. Here's when it happened back over here. And then we were never able to be over the 225 for the rest of the day. That's how and why they do it. Now, we were getting close, but as soon as we get close, boom, here's another 40,000. Let's take a look at what happened at 250 now. See what was going on in between here. All of a sudden, we're starting to break it up. Okay, everybody's happy. We're going to be breaking over the 225. Now, all of a sudden, no, you don't. Here, we're going to put 800,000 on you. Boom, here's another bump. 830,000 in 1 minute. So that for sure, we're not going over 225, and they're going to keep it under. So this market manipulation at best, there's 3 examples there. At the end of the day, we were not able to regain that 225. And they can do this in the short term, but they can't do this in the long term. As soon as there's a big catalyst, as soon as there's hundreds of millions of shares being sold again, as soon as the preeclampsia goes, as soon as any merger or acquisition happens, anything with Crohn's and colitis, with that drug delivery system, as soon as anything like that happens, and I'm going to love it, these guys are going to get caught. Because right now, again today, unfortunately, we're experiencing market manipulation. And here we can see Citadel. Citadel is the market maker, but here they are as the largest firm with current shares. So Citadel stands to make millions of dollars from trying to short the stock and is supposed to be the market maker and manipulator. Not supposed to be the manipulator. They're supposed to be the market maker. This is illegal, and the U.S. Department of Justice is currently investigating, and God bless them, man, is like, please make sure this does not continue to happen. I'm okay with this trade because I know this company is going to, I believe, not financial advice, this company is going to withstand this short-term, minute-by-minute market manipulation that's going on right now. And as long as we understand that and can see that, then in the long term, any catalyst is going to shoot these things right through. and the shorts themselves will be caught. They cannot do this in the long term. Some say this is the most manipulated stock in the market. Options expiring Thursday, December 23rd, 781,000 calls and puts at the 250. Why do we think that they're trying to get it under 250? There's only 127,400 at $2, so it's not as much of an incentive for them to be under $2 unless they have shorts to regain there. So taking a look at the graph, you can see this are the calls. If they're able to push it lower than 250, which they've been able to, the only thing that isn't in the money are these low ones at $1.50 and $2. Everything else they make money off of because they are the largest sellers of call options. Of course, anybody can sell call options. When we take a look at the puts, similarly, they will benefit if it's under the 250. All of these become in the money for them, and these are what they own. Just like we see right here. These are all puts. This is what they own. Put. That's what they own. That's what they own here. And so if they're in the money with those, then they're making their money. The hedgies have a lot to gain if the closing price on December 23rd is less than 250, as 97% of the calls would be out of the money and 83% of the puts would be in the money. There is not a huge incentive for the shorts to go for the price to be under $2. However, if they still need to recover previous shorts from under this level, they may do so. As the Christmas, everybody's shopping, everybody's having family over. It's like, come on, take a break, shit it out. And you know what? I had to put this up again because people were saying I missed it. You got to put it up again. And so who again was the character for the Grinch? Was that who was that? Yeah, it was Kenny. Kenny G is the Grinch this year. There is no doubt about it. And take a look at the shorts. We see it was fairly even for the day. 2.7 million board shares. That would have been on Monday. 2.8 million shares returned. So a little bit of a balance there. Utilization was said to be at 96.45. Cost to borrow, 36%. Days to cover, 0.37. So they have some room to be able to come in and out because the volume is low to be able to manipulate the price. Shares on loan is actually up now, 2.9% increase at 29.85 million shares on loan. That represents 28% of the free float, so it continues to go up. The estimated short interest percentage of free float is up to 21%. So that's an increase of 3% from last week. Yeah, shorts could get caught after the next catalyst is announced. And after a day like today, I can't wait. No, revenge is, shouldn't be, but I can't wait because we're going to get our tendies back. Don't sell. And it's not financial advice, but if you can hold through, market manipulation, then when the real prices emerge, then you'll be there for that. Short interest is 18 million shares as per Fintel. Days to cover 1.6. Short interest percentage to float, they have it at 17.3. Dark pool volume at 22.2 million. Dark pool short volume ratio at 42%. So it's still double what it should be. Their short squeeze score, 85.49, still makes it 53rd out of 5,400 companies. And yeah, I'm missing James here for sure. Look at all the puts. That's what they do. So they win if the puts are in the money, right? Anyway, look at it for the rest of the week and the rest of the year. Hedge funds price targets will be to have the price under 250. They've been working for it all week, and they're currently very successful at it. And perhaps gunning for the under $2 to recoup earlier shorts. Due to tax season, investors who bought PROG at levels over current prices could look to sell to capture tax losses, putting downward pressure on the price. An announcement of a merger, acquisition, or partnership, or new drug, or any other catalyst will not likely occur over the Christmas season. So we're not going to be seeing any FOMO buyers coming in. Perhaps, and this, yes, is perhaps the most manipulated stock in the market. Highlights again, as we went through yesterday, Progenity has raised approximately $160 million so far in Q4. So their earnings report that'll come out for this quarter, which ends next week, I believe will be strong. Progenity had reduced expenses by $145 million annually. It's poised to be profitable as soon as one of their many products hits the market, such as preeclampsia, their gastrointestinal products, drug delivery system for diseases such as Crohn's colitis, and their oral biotherapeutics delivery system for conditions such as diabetes and for the drug Humira. There's also cancer implications as well that the oral biotherapeutic delivery system can support. That's tens of millions of people. Ortex and Fintel short squeeze data. PROG is not going away. 53rd out of 5,000 companies. Weekly options chain have 97% of the calls out of the money, 83% of the puts in the money. The optimal price for the hedgies, as we saw with those bar graphs, is under 250. And here we're going to have actually it's 700,000 plus calls and puts at the 250 mark. It went up by about 100,000 today. Price target for the week is our price target. What we're saying is in between the $2 and $2.50 level. PROG is looking very good long term, not financial advice. So thank you all very much for watching once again. Thank you for your good wishes for James, and we will see you soon. Take care. Please like, subscribe. Would love to get up to the 1,000 subscribers. So if you see anybody over Christmas, that sort of thing, if you like these, if you like the the apeness that is coming through here, is like, we can't let Kenny and his boys take any more money away from us. And so the more that we can get out of specifically how they're doing this, then the better I believe we'll all be. And I believe this is an awesome company. That's what the Great Canadian Apes are all about, trying to identify areas that are being misused by the system and to identify good solid stocks that were being shorted that potentially can bring us and our families some solid money. Thank you very much. Take care. Bye-bye.